I recently made a video talking about why I think trading psychology is overrated in the trading space, and it obviously got a lot of strong responses, and in this video I'm going to be responding to some of the comments that I got on my video. Now, if you haven't seen the video, we'll leave that linked in the top right if you want to go check out the full thing. But just as a high-level recap, essentially, long story short, in that video, I made the point that trading psychology and having discipline in your trading is obviously a requirement, just like anything you want to be successful at, but it's not the hardest part of becoming a profitable trader. Everywhere you look, everyone seems to say, if you just master your emotions and stop gambling, you'll be a profitable trader. Whereas that is a fallacy that I think is really dangerous to a lot of traders out there. Instead, what is really difficult to find in markets is a strategy, a mechanical rule set that you can use over and over and over that actually produces a considerable amount of profits over the losses that it will also inevitably take. As every strategy has wins and losses, it's actually way harder than it seems to find a strategy that consistently makes more money than you lose. And I argued in this video that if you had a strategy where essentially you had a guaranteed edge over the long term, that 60% of the time you would win and 40% of the time you would lose on a 1-to-1 risk reward ratio, that would psychologically not be hard to keep trading even if you went through a drawdown period. If you had that, knowledge that this strategy over time is going to produce 60% wins, 40% losses, and I'm going to come out on top, all you'd have to do to make your discipline easier is just reduce your trading size to a small enough margin that drawdowns are easy enough to handle. I also made the point in this video that if most traders just reduce their trading size significantly, they would have a lot less problems with their trading emotions. Anybody trading with huge position size on a small account is going to go insane and blow accounts. It's just not sustainable, and it's really hard emotionally to handle that sort of thing, and that's certainly not what has made me a profitable trader. Risking small with an edge is the most important thing, point blank period, in trading. Having discipline, like I said, is important to any sort of practice or thing worth having in life, but what really separates great traders is traders that find consistent edge and properly manage risk to survive drawdowns. It's not keeping your emotions in check. You know why? Because if you keep your emotions in check, that's great, but if you don't have an edge, you'll just be losing money at a slower pace. If you manage risk and you still don't have an edge, you'll just be, instead of dropping your account like this, you'll be doing this over time. With an edge in the markets and small risk management, yes, you will have drawdowns, but the overall trajectory of your account over time will be going up like this. Trading psychology alone does not do this. Even if you have great discipline and great risk management, if you do not have an edge over time, this is what your account will look like. If you have good risk management plus good discipline plus no edge, this is what your trading returns will look like. You won't be losing money quickly, but even with that good discipline and risk management, without an edge, you'll still be losing money. And typically, without discipline, your risk management goes out the window. These two things typically move in tandem. So if you actually take the time to build a strategy that has an edge and a risk management model, the discipline part kind of comes easy. Like this point, who pointed out that why do people go to casinos if it's only about trading psychology? And I pointed out that the house always wins at the casino in the long run, and that casino managers don't need psychology. They just need risk management and edge. Over time, a casino manager, let's say you're talking about blackjack or roulette, the house has the edge. So over time, as long as they're taking small enough bets relative to the overall casino's bankroll, this is what their income is going to look like. They don't need psychology to make that work. It's just math, and it's just letting the edge play out over time with small enough trade size, or in their case, bet size, so that if the casino incurs a period of time where they just have some bad variance and lose, they're still over time going to make money. My whole point is that building a strategy that produces these types of returns is the hard part. Finding that is difficult. Managing your emotions is way easier than finding something in the financial markets that produces consistent edge. One of the strongest ways to ensure that you actually have trading edge is to backtest your strategies thoroughly. And I'm proud to say that today's video is sponsored by the best software in the game for helping traders to find an edge. That is none other than Forex Tester. Forex Tester has some of the most impressive software in the trading space for backtesting and building strategies that actually work and are consistently able to make money in the long term. Whatever your trading style and whatever you trade, Forex Tester gives you the tools to put yourself into a simulated trading environment in which you can backtest and see just how good your trading strategy actually is, and to build up your strategic edge in the markets before you start trading live real money. I'm hitting it hard here today in this video that the real key to trading success is good position sizing and actually having a strategic edge, and that trading discipline and psychology is also important, but those things will come in line after you've actually done the work to build a systematic edge and a system in the markets. It's much easier to stick to the system if you actually have a system that's built on back-tested results. So I highly recommend that everybody who's watching this who has not already spent some significant time backtesting and building strategies to actually ensure that you should be making money in the markets with a system, you should absolutely take some time to check out today's video sponsor, Forex Tester, down below in the description. And they're also offering a significant discount to subscribers of my YouTube channel with the promo code that you see on the screen right now. Enter that promo code at checkout and use the link in the description down below to start backtesting your systems and strategies to do the steps necessary to actually become a profitable trader. To me, this is a no-brainer. Rather than trading live money and just donating it to the markets, you should absolutely be taking the time to spend a little bit of money on a subscription for a software tool that helps you to backtest and build out your edge before going live. So check out today's video sponsor down below in the description, Forex Tester. Thanks again to them sponsoring the video, and now back to it. This person says, if trading psychology is not that important, then please explain to me why the majority of traders make money trading paper accounts, but when it comes to trading a real account with real money in it, they crash and crumble. I responded pretty quick to this because that is actually not true at all. The majority of traders do not make consistent returns on demo accounts. They lose money over time on both demo and live accounts. A casino manager does not need psychology to consistently make money offering blackjack and roulette to gamblers who walk into the casino. The casino manager simply needs edge and a proper risk management, and over time, the rest will take care of itself. I do want to reiterate, as I've done several times in this video, discipline is required, of course, to anything, right? Any sort of thing, you know, taking care of your health, taking care of your family, taking care of your personal finances. All of these things require discipline. That's a given. But what really makes traders great is finding edge and managing risk, not freaking out when a trade goes wrong. Discipline is required, but building discipline is far easier. Still important. Again, I'm not saying it's not important. That's what people keep commenting on these topics. They say, Nick, you know, it's really important. Discipline is really important. I know it is. I'm not saying it's not. I'm saying that finding an edge is significantly more important and more difficult than just getting your emotions under control. And most people can get their emotions under control on a lot of things. Most people cannot find edges in the financial markets. This person commented and said, but cutting losses early, it's psychological. To which I would respond again, no, it's actually mechanical. Choosing how to close your trades should be a strategic and mechanical plan done beforehand, not a spur of the moment decision reliant on quote unquote trading psychology. Choosing how you close your trades is not something you should be making up on the spot. It's something you should prep beforehand. And just having the discipline to do what your strategy is, again, still important, but far easier than actually finding the mechanical plan that makes money over time. This person definitely gets it. They say, I agree 100%. During seminars, brokers and gurus and all sorts of the people in the industry that want to sell you something, they use this notion to get new experienced traders into the game. I responded that it's pretty easy to convince people they need to just have discipline to beat the financial markets, which just saying that sentence sounds like such a joke because it's so unrealistic. There's entire teams on Wall Street, brilliant people trying to figure out where the markets are going to go, and gurus and, you know, course salesman people will try to just tell you, oh, just have discipline and you'll beat the financial markets. Are you kidding me? The math does not math there. Telling them the reality, i.e. that it is very hard to find an edge in the markets, would scare the average person away from depositing money into brokerages and buying courses and doing all this stuff. Again, I'm being as real as I can about the industry right now, which is essentially there's a lot of stuff that just wants to prey on people who, they'll take that and say, oh yeah, I just need to have discipline. I just need to stop being emotional while I trade. No, likely you're using emotion and discipline as, scapegoats for just gambling mentality and treating the financial markets like a roulette table and wondering why you're not making money. This person definitely gets it too. It's easier for gurus to sell courses only teaching psychology rather than selling a course with real market edge. And they said, bingo, one is significantly easier to teach than the other. Every average Joe, even fake traders on social media, can teach you trading psychology. Very few ones can actually teach you a strategy that has an edge. That is the whole point of what I'm trying to get at, and I'm hoping people are understanding. If you resonate with this, make sure to hit the thumbs up button down below. Again, I feel like this is sort of an obvious topic, but a lot of people seem to disagree with me on this. But to put this as bluntly as I can, I am a profitable trader. I've spent the last 10 years studying this stuff. And I'm telling you that trading psychology is, in my opinion, very little to do with why I've been a profitable trader, and much more the research and finding edge was definitely more significant to actually making money in the markets. This is where everybody is caught up. They're obsessive about the trading psychology side, whereas they really should be getting into the backtesting and building systems and building strategies and doing the hard work that nobody seems to want to do. Again, everybody on the block can teach you trading psychology. It's really easy to, fake sounding smart with trading psychology. It's really hard to fake knowing how to actually mechanically make money in the markets. This person says, I don't know why people always argue over the importance, as that does not matter. The fact is you need 1, a strategy with positive expected value. Number 2, good risk management. And 3, good psychological discipline. None is more important than the other. You can't be profitable without 3. They are interdependent. So I would actually disagree. So again, I know I'm really being kind of an extremist on this topic. Yes, all 3 are important. But what I'm saying is, and you need all 3, that part I agree with. What I disagree with is that a lot of traders kind of are like, oh yeah, but what I really struggle with is the discipline part. I'm trying to make the very strong distinction that most traders think it's the psychological part that is holding them back, where a lot of times it is number 1 and number 2. I responded, I said, right. And I would argue finding a strategy with worthwhile positive edge is significantly more difficult than the other 2. Again, the challenge here is that what people don't really realize about markets is they're way harder to predict than people think they are. This person announced that they've unsubscribed, which thank you for letting us know. Even 60% win rates have losing streaks, and after the 12th loss in a row, you need good psychology to stick with it. Yes, that's true. But again, if you know you have a 60% win rate and your trade size is small enough, you're not going to be panicking. It's small enough that it's not really a big deal. Just stick to the plan, and over time, you'll come out of that drawdown. Now, if you're risking inappropriately and you take 12 losses in a row on a 60% win rate, which is very much possible, yeah, you're going to be freaking out. But that's where, again, the mechanical aspects to what we're discussing, risk size and edge, are far more important than having, psychology or blaming psychology. Again, you do need to have the discipline aspect to it, but that is far easier than the first 2. Properly managing your size and having an edge is the harder part. I said, of course, you may have missed it, but I acknowledged several times in the video the importance of trading psychology, but argue that it is not the hardest aspect of trading or even close to it. My point is that overcoming inevitable drawdowns in trading psychology is important, but a significantly easier task than finding a strategy with consistent and repeatable edge. It is very difficult to find a 60% win rate on a 1-to-1 risk to reward that actually lasts long term. I challenge anybody who thinks to the opposite. If you actually have taken the time to do backtesting and you know how difficult it is to find edge in markets, you'll probably resonate this. The people who disagree with this statement the most are people who have never really spent a considerable time backtesting. Finding some sort of strategy or entry pattern that produces a very high probability of directional, correctness is way harder than it sounds. This person stuck up for me a little bit, said, did he claim once that psychology was useless? It's still an aspect, but you need edge to have proper psychology. Exactly. having risk management and an edge is critical to actually having the psychology aspect even figured out. If you've never actually tested and built a system, how are you expected to have psychology around it? That's like saying I have no proven results, but I just need to trust the process. I love this person's comment. They said, true, because if you think that is true, bring a psychiatrist to a casino and look if he is winning or losing. Obviously making the argument that even a person, a psychiatrist, somebody who has great discipline and very all put together, if they don't have edge, which is AKA playing roulette, you do not have an edge, the casino has the edge, over time, you're going to lose money. If you risk a lot, you'll lose it quick. If you risk a little, you'll lose it slow. I responded, I said, ask the casino manager if they're having panic attacks about their highly profitable defined edge at the roulette table. Again, you almost want to, I saw a video, some of you guys might have seen this before. There's a video from a long time ago by Adam Koo. I really enjoy his videos and I have for a long time. He made the analogy that you essentially want to be the casino in financial markets. You want to have the edge in your favor and you want to risk small, and over time, your account will look like this. Sure, it will have drops. Sure, it will have, ups and downs. But the point is, proper trading is all built around edge and risk management. At the end of the day, that's the sort of thing that's going to make you money. Trading psychology is not going to make you money. Now, it can cost you if you're, not a disciplined person. But again, building discipline oftentimes comes from actually taking the time to build strategies that have edge and properly learn the mechanics of trading before you jump into the markets. Rather than the person who jumps right into the markets, they're throwing money around and statistically losing a ton of money because they lack any sort of risk management or edge. Again, trading discipline is important at the final step, but having edge mechanically and having some sort of repeatable system with good risk management to survive drawdowns, that is what actually makes you money in the financial markets. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.